Hello and welcome to Startup Street. I'm Arundhati Ramnan, and joining me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. SaaS-enabled marketplace Venwiz bags $8.3 million. The Series A round was led by Sorin Investments. Existing investors, Axel and Nexus Venture Partners, also participated. Funds will be used for product enhancement and team expansion.
HR tech platform HireSure AI gets $2.5 million in series funding led by Y Combinator and Bindi Balsel's Three State Capital. Tribe Capital and Pioneer Fund also participated. Plans to use the funds to build new products and scale up the engineering and product teams.
Paytm completes buyback of shares worth a little over 849 crore rupees at an average price of close to 546 rupees apiece. According to regulatory filings, the company bought back shares in the price range of 703 to 480 rupees a share. During the buyback period, Alibaba sold its entire direct stake in the company in 2 tranches.
Grocery delivery service JioMart Expresses reports JioMart is exiting the heavy burn business that it launched last year.
Elon Musk is aiming to appoint his successor as Twitter CEO by the end of this year, says he needs to stabilize the company first and ensure it is financially healthy.
Social media platform Reddit may go public in the second half of the year, say reports. Reddit is keeping its IPO paperwork up to date in preparation for its debut when market conditions improve, the report added.
Salesforce CEO Mark Benioff admits that laying off thousands of employees during a 2-hour all-hands meeting call over a call was a bad idea. He tells New York Times it's hard to have a call like that with such a large group and have it be effective, and we paid a price. Those were the headlines that we're tracking for you this evening. Now, Indian software as a service companies are poised to command 8% of the global SaaS market, generating $35 billion in annual recurring revenue by 2027, growing at 20 to 25% per annum. This, according to Bain Company's latest report on India SaaS Report 2022. It says that almost 90% of Indian SaaS investors are expecting to either increase or maintain their capital allocation to SaaS.
The report finds that of the 1,600 Indian SaaS companies that have been funded over the past 5 years, around 14 of them exceed $100 million in ARR versus around 1 or 2 5 years ago. And they're also reaching this growth milestone as quickly as their peers or counterparts in the US. To discuss this report and its findings, joining Arundhati and me now is Aditya Shukla, who's partner at Bain Company.
Yeah, hi, Arundhati here. Thanks for joining in. Now, the report finds that the Indian SaaS companies will generate $35 billion to annual recurring revenue by 2027 and command 8% of the global market in 5 years. So what is going to drive this kind of growth?
So, Arundhati, a bunch of things, right? I think one, SaaS has a lot of white space globally. So even if you look at the developed markets and you look at some sub-segments that are very well developed, there's still a lot of headroom for growth. 2, Indian SaaS companies have actually demonstrated clear pockets of strength and leadership. So whether it is product quality, whether it is high service excellence, whether it is competitive pricing in many cases, you have a situation where Indian SaaS companies are actually becoming leaders in their categories. And in some cases, they have actually helped create the category itself, right? So if you look at a bunch of DevOps or testing-focused companies, they are market leaders, they are category creators. And then lastly, the last 4 or 5 years, the way this ecosystem has evolved, you have, as you mentioned, $12 to $13 billion of revenue generated by Indian SaaS companies. This is up 3x versus 2019. If I look at the investments that have been made into SaaS, that number for last year was around $5 billion. That itself is significantly up versus what you had previously. So the entire flywheel from both a company lens as well as from an investor lens seems to be turning quite well. And that's why we feel fairly confident that given the growth trajectory of individual companies and given the interest that investors have in SaaS, you will see more and more winners really break out from India SaaS. And when that happens, we will just capture a much larger part of the global pie.
Aditya, since you brought up the investors and that they'd invested about $5 billion in SaaS companies last year, your report also finds that 90% of the investors are now actually expecting to either increase or maintain their capital allocation to these companies. So, what kind of returns should we expect, or are they expecting? And what are the specific subsectors that actually look more promising versus the rest?
So, look, I think returns obviously will vary depending on the different subsectors, which I will get to. I think the reason investors find it exciting is, one, because most SaaS companies have very strong unit economics. So you're talking about gross margins of 75-80% plus, in some cases even higher. So fundamentally, the business model is very well proven for these SaaS companies, which I think makes it super exciting for investors. Two, you're already seeing more and more exits. So I think 2022 had around 40 odd exits within the Indian SaaS ecosystem. If you look at how globally exits have trended, there's a very clear track record of IPOs, of secondary exits, of both SaaS companies as well as legacy companies buying out smaller SaaS companies. I think all of those are possibilities for SaaS investors. So they are very bullish and excited about that. From a subsector lens, look, it's spread across three broad areas. One is horizontal SaaS. So think of your classic, ERP, CRM suite, marketing tech companies. That continues to be the dominant pool of Indian SaaS. Large TAMs, very underpenetrated, not winner-take-all markets. And you've seen a bunch of Indian SaaS companies play in that. The second segment, which is very exciting for investors, are your DevOps-focused SaaS companies. So companies that are focused specifically on developers. This is where your companies like a Hasura or a browser stack or a Lambda test, many of Postman, many of them will play.
Right.
That is interesting for investors because Indians have been category creators in this space. India actually houses around 10-15% of the global developer base. And the product quality is really good. So that's the second area of interest. And the third, I would say, selectively, you will see vertical SaaS companies.
Right.
So you've seen Zenoti, you've seen Innovator, you've seen a few others that are vertical focused.
Okay.
Our sense is, and speaking to all the investors, that you will have fewer vertical SaaS companies because the TAMs are smaller, but you will end up having more winners within that. So broadly, these are three areas.
Right.
And even if I look at areas where Indian SaaS companies have seen a lot of proliferation, there's still a lot of white space. Which is what's exciting for the investors because they think there's that much more headroom for
So you're saying we'll see fewer companies, but better quality companies and more winners. So it was another record year for Indian SaaS investments in 2022. Despite a funding winter, PE and VC investment reached $5.1 billion, which was up 20% versus 2021. So do you expect this momentum to continue? Will we see more early stage funding at this point?
Great question. So I think early stage funding actually for SaaS exponentially increased also 2022. So that will continue growing. What happened over 2022 is the first half of the year saw secular growth in investments across all company sizes, across all these segments. The second half actually saw a dip when it came to large deals and mega ticket size investments. And I think the reason for that was that there has been some valuation pressure given what's happened in the US market.
Aditya, we seem to have you on a bad line, so we can't hear you very clearly, but we're also completely out of time. Thank you so much for joining us on the show today. Moving on, Edtech startup CollegeDekho recently bagged $9 million from Winter Capital, which doubled down on its investment on the firm. The startup had earlier raised $35 million in a Series B round last year, which was also led by Winter Capital, along with ETS Strategic Capital and other investors. Started in 2015, the platform now connects prospective students with colleges using its proprietary technology and an AI-based chatbot, and has since then counseled over 70 lakh students and around 1,500 colleges with their student recruitments. Joining us now to discuss the company's growth plan is Ruchir Arora, the co-founder and CEO of CollegeDekho. Ruchir, thank you so much for joining us on the show today. You're a college admissions and higher education services ecosystem. Talk to us about the various services that you have on offer. Any new offerings in the pipeline?
Thanks for having me. Yeah, we started with helping students get the right college and the course, and we are sort of sticking to that.
Right.
That's sort of been our most high growth business, and as you rightly said, upwards of 70 lakh students have actually been counseled by us. We've also sort of understood that this category is essentially in two phases, right? We work for kids who are going to these private colleges, people who are not amongst the top 5 percentile of their college search or of the school. So helping students find the right college, and then while they are studying in college, we are actually one of the first ones who's helping kids gain knowledge in terms of their curriculum courses, and also we are helping them get skilling courses while they're studying in college, so that when they come out as better experienced professionals. Given the fact we keep hearing a lot about unemployability and kids coming out of colleges not being employable now, so we are essentially now started working on that for the last year.
All right, so that's what you've also been working on. You recently raised $9 million from Winter Capital in an ongoing round. How do you plan to use these funds? What's on top of your agenda?
We've been, this is the third or fourth interaction that I'm doing with you guys, but we've always been, almost an 80% gross margin company. On and off, we are EBITDA positive, and we choose to invest back in the business. So, this quarter itself, in the Jan-Feb-March quarter, we are again EBITDA and cash positive. So we are essentially on good territory when it comes to, business. All this money is sort of planned to use towards growth, and moving from the revenue that we were doing last year to triple down or double down on that revenue.
All right. In fact, I was going to ask you more about your revenues itself. You reached 100 crore rupees in FY21-22. What do you plan to clock for this current financial year? On track to turn EBITDA positive at this point. So the road to what's the road to profitability looking like?
So, we were very close to 100 crores last year. We have actually grown 2x from there. So we should be very close to 200 crores this year. Okay. And as I said, we choose to sort of invest back in the business. But if you look at our Jan-Feb-March quarter, which is the Q1 for the calendar year, we are already turned EBITDA profitable. And we see the similar kind of growth going on next year as well, and our projections say that we'll keep maintaining this EBITDA positive territory, and next year again we plan to grow more than 100% and with healthy 15 to 20% EBITDA.
All right. Talk to us about the traction you're seeing for your offerings. Where are you seeing the most amount of growth? How many students have you worked with, and how do you plan to grow this further? How do you plan to grow your base?
So we own two large college search properties. One is CollegeDekho.com, and the other one is what we acquired last year called Get My Uni. Right. Between both of us, we essentially clock almost 10 to 15 million sort of visits a month, which gives us access to almost 40% of all college-going students in a year. And that sort of helps us then channelize them to find the right course college. And then, as I said, the new service offering that we've had is very interesting, where we are essentially working with colleges to give skilling courses as well as placement guarantee courses to students. So, it'll be one of the first few, sort of integrations when you work with colleges, not only give them enrollments in terms of the best student that they can join the college, but also help them find the right skill and eventually the right job as they graduate from college. So that's what sort of we've been working a lot on, and that's where we see the next phase of growth coming from.
All right, so that's where your next phase of growth is going to come from. Are you looking at more inorganic opportunities? Are you in talks with any companies? What's the plan on that front?
Yeah, so frankly, we are always looking out to find companies which can help complement our skill set, or companies which can help sort of grow us. But as of now, we've sort of done 2 acquisitions in the last 12 months. So we are sort of right now being more we are working more on consolidating them and trying to create the right value out of some of these companies. So in near term, you won't see anything, but yeah, always in lookout to find the right set of companies which can complement our skill set. Right,
so always on the lookout, but currently just working on the acquisitions you've already made. But India's Edtech sector has seen a whole host of layoffs and has essentially seen a shakeout. So what's your hiring plan, and what are the conversations you've had with your investors considering the current scenario?
Well, I think I would say that, some of these, especially, in the Edtech, there was a big boom around the COVID times because a lot of this education moved online. We, neither get affected negatively nor very positively on COVID time. So for us, we've been sort of running a very steady business over a period of time, growing by 80 to 100% year on year. So we didn't see a lot of shakeout. In fact, we've grown from almost 700 people about a year back to about 2,000 people today. Right. So we've almost doubled down, and we keep hiring, and we sort of are looking to hire another 500 to 600 people in the next 3 to 4 months. On investor conversations, I think there's a lot of focus on path to profitability, which you sort of picked up earlier.
Right.
And also, reducing cash burns and definitely more sort of aspiration to see how some of these, obviously the valuations have, definitely not compromised, but definitely rationalized a bit from what it was
Right.
about a year back. But again, we are sort of thankfully better positioned at some of these things because we are EBITDA positive,
Absolutely.
growing, and sort of we've sort of been able to maintain good relationships with all our
Right. So
existing and incoming investors.
absolutely. So you've seen steady growth and you only keep growing. All right, Ruchi, thank you so much for joining us on the show today, and we wish you all the best going forward.
Thanks for having us. Thank you.
On that note, it is time for us to head into a short break. But coming up next, digital lending platform M-Pocket is looking to expand their workforce by March next year to maintain its growth trajectory. A special conversation with the company's co-founder on their expansion plan and the impact of the RBI's digital lending guidelines. On the other side, stay tuned.